All right, guys. So again, let's go ahead and look at our example here. So I'm going to create an invoice and I'm going to create it for, oopsies, I want this window to be bigger. I'm going to go ahead and create it for Cruz Maria. And she is, I think she's San Jose. All right, and I'm going to bill her for the group item that we, not that one. And I'm going to bill her for one of the quantities for the 5x7 retouching, which is we just created, right? As you can see, it has given me the little line items. Like I said, when you print it out, I want it to show up on there. And if you notice, look, it does charge me for the full amount. Oh no, did I place it in the wrong spot? Okay, let me go ahead and fix that real quick. So let me go ahead and fix that item real quick. And I'm going to click no. Don't say that transaction. So I'm going to go ahead and fix that item real quick. It's supposed to be retouching is 3 is the quantity for retouching is 3. And the frame is actually just 1. So if I were to go here, I'd be able to fix that right here. So the retouching is 3. And the picture frame is just 1. And I'm going to go ahead and click OK and save that transaction. So again, if I were to bill Miss Cruz Maria, okay, for that exact package. So Cruz Maria, oopsies. Yes, Cruz Maria. And I think she's a San Jose location. And I don't have a PO number, but she gets this. Okay, so if I were to charge her for one of those retouching packages, as you can see here, it itemizes for you, and it says 3 of the retouching photos, and you get 1 picture frame, right? So again, it lists all the details of exactly how much it's going to cost you. And here, the total package of this is going to cost you $294. Now, what I get to do is I can change this number so then it will itemize it right here. But what I can do is I can go ahead and manipulate this number and make it so then it doesn't cost that much. So let me see where I can do this. So I can actually enter the amount and actually fix it. Let's say I'm going to make this $250, and I say that this picture frame is free. Okay, it comes with it. Okay, okay, and now it's going to show me that my full bill for her is just a straight $250. So instead of charging her $294, I decided to give her a bundle package, and I can change the information saying, if you buy this, you get the picture frame for free. And right here, I've showed you that this is exactly what it's going to look like. Okay. And yes, I'm not going to save it just because there's no need to, because I just wanted to show you the example. But yes, so after, again, so for whatever you set it in the item, the cost or the selling price, you can change it on the actual invoice if it's a bundle package. So make sure that you know that, okay? And I'm going to click close. Okay, or clear. And I'm going to click close. Okay, so that is how to create group items. All right. Next section, I'm going to actually have you guys read this on your own. just because this is more pertinent for companies that are who are in the business of manufacturing, as in they want to create their own product. And this is something that, I mean, if you are planning to create your own business, and let's say you do want to and you are a manufacturing company instead of a retailer, or you do both, you create the product and you sell it to other people, whether it's to the public or to actual other retail stores, then you would definitely want to read up upon this part. So what an inventory assembly is, it's like I said, if you're planning to build your own parts, you would associate each item with a part, and you're going to piece it together, and you're going to place it into a group item. Now, if you guys remember from the group item, you can select quite a few accounts or items in that list. You can have up to about five items you can place in a group item. Okay, so again, let's say I make cakes, right? So I can have my eggs, my flour, and my sugar, right? And the flavoring, right? Cocoa powder. Let's say I want to make chocolate cakes. I can have each item a separate part of my cake, and then when I group it together, it's going to be the cake itself. So I get to determine what I want to price it as, but it's going to include all of those items, right? So this is exactly for predominantly manufacturing companies who either plan to sell to the public or sell to an actual retail store. So they're in the business of creating products, and you would definitely want to read upon this section here. And I believe there is more information on page 253. But in our class, I only want you to just focus on the main core concepts, and usually those who are going into to use QuickBooks, this is just to teach you how to be able to do recording transactions, and the purpose of our class is for you to become the financial accountant, not a managerial accountant, okay? But there is a section, and I believe QuickBooks Premier has this feature, okay? Last couple things is going to be inventory reports. Again, we just saw a few of them. There is one that isn't there, and that would be this one right here, the inventory item quick report. We do not actually have that feature in the new QuickBooks. It actually is now they don't have that feature anymore, or that report anymore. Because if I were to go to inventory, I don't have the inventory item quick report. So yes, so I don't have that on my end. So it's definitely going to be in your book. So make sure that you understand that. And what it does is it just gives you a list of all the items that you purchased. And that's pretty much it. Again, you can also get that information by clicking the other reports. But these ones are more specifically geared towards what is the value of my inventory, right? And it's based on either by item or by vendor, right? This is like looking at the stocks, like how much you have in stock, okay? And that's the next one. And then I believe that is actually everything. So here's the inventory stock status by vendor. Again, you can also look it up by item as well. You can also look at the inventory valuation summary, which again gives you a total outline of how many items you have, how much does it cost per item, and what is the value, the total value of inventory on hand. All right. So again, we're gonna go ahead and go over these questions here. So yeah, let's get started. Okay, so review questions for this chapter. Okay, so select the best answer to each of the questions, to each of the following. Okay, so question number 1. Okay, if a vendor ships more than you ordered, okay, so overshipment, then on the purchase order, okay, which of the following actions would not be appreciate? I have no idea. Appropriate. Sorry. So again, let's read that question again. I'm so sorry. If you were a vendor, if your vendor ships more than what you ordered on the purchase order, which of the following is not appropriate? Which of the following actions is not appropriate? Okay. Would it be A, you could refuse the extra shipment and send it back, okay? Or you could receive the extra inventory and do an inventory adjustment, okay? You could receive the extra inventory and into the inventory and keep it, or you could receive the extra inventory and then send it back and record it as a bill credit.
Would it be B?
Let me see. Would it be B? You could receive the extra shipment using the inventory adjustment transactions. You can actually do that, but however, you need to pay for that. Actually, you know what? I don't actually know the answer. So I'm gonna go ahead and do something real quick. Wrong one. The one above it. This. QuickBooks.
B is the only one it's not showing when it says handling overpayments on 248.
Okay. Give me like 2 seconds.
Okay.
And I will validate the answer for you. All right, what section are we on again? We are on inventory. So let me see. Inventory is going to be, yes, it is B. Okay. I figured you wouldn't be able to just receive it and ignore it, so I kind of figured D would be the answer, but it is B. So yes, it would. Yeah, your answer is B. Okay. So let's see the first one. Obviously, the first one is clearly correct. You would ship it back and not adjust it, and then D. See, D is kind of questioned because it's like you can receive the extra inventory, but why would you send a credit memo to the vendor? They're supposed to bill you for it. That's why I said D would have been more correct, but you guys are correct. It is B. You should receive you could receive the extra inventory using the inventory evaluation, right? This one kind of gives it in the air saying you're going to take it and that's it. No, that's not fair. You have to pay your vendor. So B is the correct answer. All right. Question number 2. When setting up a group item, when do you enter the sales price? Okay. Is it A, when you're entering the price in the sales price field? or B, entering in the price in the item receipt. Item pricing list, or C, the group item does not include the sales price field, or D, enter the price in the set price window.
The
So
group item does not include the sales price.
that is true. Yes. So remember, when do you set it? You set it in the individual items, and it will not show on the actual setting up the group item. That's correct. Okay. Number 3, to activate QuickBooks inventory, what should you do? A, select the file menu and then select preferences. B, select purchase in the vendors, purchases dash vendors. C, consult your accountant to determine the proper inventory valuation, which has nothing to do with it. Or D, select the edit menu, then select the preferences, then click on items in inventory, and then preferences, and then click the company preferences. So which one's more correct?
D.
D is correct. Yes, if you guys remember, once you get to here to the company preferences, you should see it saying activate inventory parts. So that's D is correct. Number 4, the inventory asset account. Okay. A, tracks open purchase orders of inventory items. B, decreases when inventory is purchased. Or C, increases when inventory is sold. Or D, increases when inventory is purchased. So the question is, when we're looking at our inventory asset account. So this is, think of the chart of accounts. What happens to it?
D.
Yes, D. So this is a whatchamacallit. This is a normal balance question. So if you're looking at the accounting model, right? An inventory asset is going to be an asset, right? If you are trying to make a purchase order, or when inventory is purchased, it's going to increase it. A is obviously wrong because it doesn't keep track of your purchase orders, right? You have to go to your open purchase orders reports. B, it doesn't decrease inventory because when you purchase inventory, right, you're increasing your assets, right? So it doesn't decrease it when you make your purchase order. And it definitely has nothing to do with when you sell it because it's associated with the sales, but when you have inventory and when you sell an inventory, you're decreasing your inventory, right? You're taking away the items that you have in your inventory because you sold it. They're no longer there. So D is the correct answer. All right, lastly, question number 5. In QuickBooks Pro, Premier, and Accountant, inventory can do all of the following except, okay, these are pretty long. A, provide reports on status of each item in inventory. Okay. B, use the LIFO, FIFO methods of calculating inventory. Or C, calculate gross profit on inventory sold. Or D, track the open purchase orders for every inventory item. What can Pro, Premier, and Accountant do? Wait, hold on. Can do. Oh, can do all except. Oh. Read carefully, guys.
So those
Would-
can't do the B, FIFO and FIFO.
Yes, that's correct. What can Pro, Premier, and Accountant do? What kind of costing method can they do?
Average costing.
Average costing. That's correct. Only QuickBooks Enterprise Solutions can have the feature to be able to calculate the cost of inventory using the LIFO and FIFO and other methods out there. Okay, so B is the correct answer because you have to look at the keyword except. Okay, so yes, it can do all the reports. Yes, it can look at purchase orders, open purchase orders, and yes, it can check out the gross profits based on the inventory that is sold. Yes, that's the whole purpose of a profit and loss report. So A, C, and D are correct as part of Pro, Premier, and Accountant. Okay. All right. So right now it is 10:40. So I'm gonna go ahead and call a break here. And when we come back, let's go ahead and dive in to